Investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Monday, the 28th of November. And it is looking quite interesting here. We've got the Dow. Let me just go to the Dow itself right now instead of the futures. The Dow's down 157 at 34,187. The S&P, and I'll go through all the notation in the Chapman way, but let me just get these done. S&P's down 24 at 4,001. The QQQ Index 100 trading vehicle is down $1 at 285.89. The IWM, the Russell 2000, is down 184 at 184, down $1.42, struggling to get to the 200-period moving average, 186. Let's go to gold. Gold is down $6 at 1762, and it's acting quite well. It's a pattern we'll talk about as soon as I return to this in a more detailed way. Silver is down 24 cents at 21,366. We're looking at high-grade copper. High-grade copper, there it is. High-grade copper is down at 3.60, down 0.02 in the dreaded H pattern. We spoke about this on Wednesday. And we're looking at U.S. bonds. U.S. bonds have gone to a leg D. In fact, it just snuck to an E, but I must just check because it trades in right here. It's a click once. So that was E at this is a continuous contract, 128 and 15 seconds. Next high was 128 and 15 seconds. So this is a leg E because today went fractionally higher. And we're looking at leg E. Yep, it could even be an instant restart, but we'll call it E for now to be a little conservative on this particular issue. And we're looking at 127 and 29 seconds, up about a half a point. So now what we're looking at within the context of all these different commodities, crude oil is down $1 at 75.20. There are a bunch of trend lines. These are right there. So these are horizontal trend lines, and of course we're looking at this is a continuous contract made at peak D right there about November the 7th or so. The low that was made on the at 74, 73 on the 26th of September. Today we went just under it. We went to 73.60. There's the pattern that I call the H pattern, an arch formation. It's come back to really important support. There's a fib number. Oh, I've got that as a 0. That's where I started the move. It went to about a 38.2. So talking about, I've been doing a lot of studying. There's so many wonderful hosts here at TFNN for years and years, decades. I've been listening to both the one-to-one, the A to B equals C to D, very different to the Chapman methodology of peaks of A, B, C, D, etc. And I've tried to integrate it to different things. Some of it, it just fits very well with the techniques that I use, and other parts of it just haven't quite got into. But I did decide I would, over the last couple of days, I did it just as I was wrapping up the show, just Tuesday, I think it was. As I was wrapping up the show, I got a Gartley, one of Larry Pesavento's Gartleys in the 1-minute chart, and with the show finished, I couldn't even discuss it because the show was already done. But then there was a really good rally here in the gold continuous contract. The low that was made last night on the 27th at 21. Was that? That's all last night, right? Wait. 11:28 started right there. Yeah, that's at 6 o'clock. So what happens is at 21. So that is, why am I getting this 9 o'clock? 9 o'clock in the evening? Yes. So gold was pulling back to 9 o'clock, and then it made a little Gartley pattern. And look at that, how nicely it went. And then it went the Chapman wave. You're always anticipating that if you get a buy signal that gets upgraded to a buy mode, there's a really good chance that you're going to get at least a peak D, 4 higher peaks. Well, look at this peak A, peak B, right there, B, peak C, and there's your D. And then it does another one, a peak A right there on that pullback. I'll point to it so that you can see it a little bit better. A, B, C, and at least a D. Well, it goes to a D, but then it makes this beautiful cup formation and goes to an E. Then pulls back to a lower low than yesterday, and that's gold. So let me just show you what I'm talking about. I'll put this in a down arrow at the D right there because everything turned down. Up arrow at the bottom right there, and then that D. The green 9-period moving average was still so strong that I could only put a plus sign in if I was doing it live. I'm doing it unlive right now. This is history. And then the E came in as the MACD turned down, as the stochastic said, hey, I'm much lower now than I was before, and therefore you can consider that if it crosses negative, the 9 goes under the 14, it's going to be quite a bit of a pullback. And look how it did. Now, I haven't seen this. I just pulled it up this moment. So look at this. If I go to that side there and I do a Chapman wave right there, bar symmetry, left side, right side, price time match, look how nicely this works. Couldn't make this up because these are the techniques, these are the rules. So you go to that there and you make that green. You don't have to use all the colors. I just do this to demonstrate. And look what happened. It goes to the peak here with a little doji candle high, comes back down. So here's your midpoint right there. Oops, I moved that over by mistake. Should be right there. Doing this live means that I'm doing two things at once. And then it takes it out. Look at that. It takes it out and goes even lower. That now is the resistance level that it's going to try to get to at 1766. It's trading at 1763.3 right now. That's a very strong resistance area. But isn't this nice? Look at that bar symmetry right there. So if you're putting all these techniques together, I mean, you can come up with a really nice trading plan, position play. Okay, enough for that. Let's go back. I'm just going to put this in ESZ22. That's still the... here we go. So here we've got in the 10-minute chart, we've got peak A, peak B, peak C. Oops, peak C, uppercase on the way up. And there's your D, right at where? The 200-period exponential moving average. Isn't that nice? I mean, they're the techniques just live as you're seeing them. Nothing made up. These are the rules that we have, and there are occasionally sub-rules, but they're still rules. You can't break those because otherwise you don't have a technique if you're form-fitting. Now, if I had to do a left side, right side price time match, let's just say it was there. Then I said, all right, well, if I'm using bar symmetry, this low right here, and if after peak A and a peak B, the technicals are still improving, it should go to at least a C and a D. So let me put this in right here. That's pink. This is going to be green. Of course, you don't have to make all the colors. I'm making the colors so that you can see it. In fact, some of the time I don't use anything. Okay, let's just move it to the right. And there it is. It came in 2 bars early in the 10-minute chart and went to exactly the high that was made in the E-mini at 3:30 on the 28th. That's 3:30 in the morning at 4,018.50. We just hit it right here. 4,017.75. Missed it. I'm sorry, by 25 cents. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Look, so let me show you another pattern. Very often at 8:30 in the morning when there's economic news, 8:30 Eastern time, when there's economic news, you can get this sudden spike up and a sudden pullback, and it looks like an uppercase A or the Eiffel Tower goes straight up and then comes all the way back and then either tests the bottom left side low or it actually stalls and then it starts the real move. In this particular instance, we had the 920 slide to the 3990s in the E-mini, and then at 9:30 it just started a big move up. It went up peak A because that made a little bit of a lower high, 25 cents, made it an A, and then because it was so quick, I decided that if there's a little nick in the on-balance volume, a little turn down, I'll treat that as a peak, which I often do if there are two parallel high bars in the futures because they're trading 25-cent increments rather than pennies. So I use this as a red B, meaning you can use it or not use it, but you want to get to a D and not make a mistake that already is a D. Then it goes to a C, and then it stalls, and I thought, uh-oh, look, the stochastic's we're over here. Stochastic is this looked to me like an emotional round left over from something, buy the dip type thing, and I thought, okay, that says it should pull back. But there are two kinds of pullbacks. One is the Eiffel Tower, straight up and straight down, and the other is where it starts to stall on the right. It tries to form support, and it gets support. Look at the 14 period moving average. It doesn't matter what this is. It happens to be the 1 minute E-mini. And then it rallies strongly, but then it makes this pattern I call the dreaded H, meaning it goes up and starts to stall, makes a gray A because they haven't got the confirmation of the technicals, hasn't made a new high, and then it turns down. As it's turning down, you've had pretty much nothing in the technicals to confirm that that bounce had veracity. And then what happens is it takes it out, and that becomes an A minus. An A minus because it rallied and it failed to cut the left side low. But in reality, I've got to be careful because the low that started off was this low here. So this is an A. It's just an A that failed because everything from that low gets counted. You count every peak and trough in the Chapman methodology. And it goes to trough A, trough B, trough C. And it starts this pattern of making lower lows and lower highs. But it's using time. Remember, time is equal to anything else. Time is as much in the contingency of parameters you look at, price, amplitude, consolidations. Time is one of those. So we're using up time, and that says, wait a minute, we're using up time. We did have a big spike to the upside. Everyone that was buying there saying, oh my God, what's going on? That was a mistake. And now they don't know what to do. And now it's just kind of new buyers are coming in, but they haven't got much strength. Sellers are just sitting there watching. And then it starts to form some kind of a base. And that base says, look for something that is much more longer term. That's why I always use the 200 period exponential moving average. I just put it there. This is that. Let me see what you can. Yep, it's orange colored right there. And look what happened. It comes so close to, the closer you get, the greater the chance that you're going to actually test it at some point, unless you spring really far away. Now look what's happened. We've made another peak A and a peak B. These are all A minuses because they're fuzzy fading because you're making lower lows, even though this is really right here. This is technically the starting point of the whole thing. All right. So what's happened is you've gone to peak A, failed, peak A, failed, peak A, holds, goes to B. And what's happened? You remember what I was saying? That 200 period moving average is now a magnet. But I would not rule it out as another point where there could be another bounce. But what it's saying is that this early buying spree is probably wrong. Now, let's get back to our story here. There's a lot of questions that I'm getting here. Wait, what is this? Let me just see. Oops. Yeah, okay. I just needed to check. My son got back home safely. Left at about 5:20 this morning. Made it all the way to Manhattan and now back in his office. Okay, so here we go. 75.86 in crude oil. Look, it's the same thing I've just been discussing. You've got yourself a test on this side here on the 10th of October with that high in the low 90s, comes back down and retests on the 7th. But look what happened. The stochastic was lower than it was before, and then it very quickly went under 80%, and the MACD quickly turned negative. So this says to me that the buying in crude oil is, in fact, the price itself is making low highs and low lows. And that, in a sense, should be a market positive. Let's look at JETS. JETS is the U.S. Global JETS ETF. 200 period exponential moving average right there in the daily chart, goes to a peak F, pulls back. That 200 period moving average at 18.58 is now very strong resistance. Some magnet lines, both resistance and an attractor is attracting the price. The further it goes away on the upside, maybe to the 1935 area, that means it's pulling away and cheating the 200 as a base. The more it takes to try to break it, it says it's a repellent zone, and if it goes under 1750 in the next day or two. So the question that came in from a subscriber, I really enjoyed, Basil, I really enjoyed your video on Saturday because you were looking at it in a very objective way, both the positives and the negatives. You saw many more negatives. And was that the reason that you went short today? And why do you go short something that we don't own? One of the reasons is I still think that the Dow is the stronger of the indices, and therefore if it pulls back, it's going to be difficult to get back in. We've taken really nice gains all the way up to about a 45% gain in one particular position. Still have that as a core position. I don't need to do that. So we've gone through another index, and we've gone short that index. And it's the first time we've shorted in, I couldn't even tell you, it's since the low, just before the low where we were short, and then finally after the low, we got out of our short position, that short from August all the way to the bottom. So all I'm saying is that, this is what we're doing. So a couple of things are going on. I'm still considering for subscribers because of the environment that we're in, that we're trying for lower price stocks in categories that seem to be holding very nicely. I'm trying to conserve as much cash because there are positions. Let me just go to this. Let me show you something. Look at Apple. So the question, I may as well just deal with the questions. Questions came in. Could I look at Apple and what do I think? Apple is holding. All it's doing, though, is holding. I don't see it as the big buy right now. It could come in very soon. And I still think that during the holiday season, it's so easy. Maybe people are getting tired of it, buying Apple products, but I still see it as the go-to place, the easy go-to place, just like Amazon's like the go-to easy place. So within that, with that context, what I'm looking at is Apple if you're a core holder of Apple at much lower prices, I would have just a little trading around it, maybe just for fun, just to practice some techniques. I wouldn't touch the core position. But if you are recently in it and now you're making just a little bit, or you're just a little bit under, I'd say keep a stop in place. It's at 144.95. So some of the position, I would say if it starts to close under 142.70, that's about 2 points lower. Be careful, because it could do a retest of the lows right down to the 134, which it did a double bottom at 134.75 and then 134.28. But core position, I think that this is, Apple is, when you think about what's going on throughout the year, Apple's held really well from the 182.94 all-time high down to the 134's lows of recent weeks. I'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back, and Dow's down 172, S&P's down 28. In the den, I was asked, could I post on? On is on Semiconductor Corporation, Intelligent Sensing, Data and Power Solutions. That's what I've written down. It's gone to a leg E in the monthly chart. It's gone to a G/B. Whoops, I should have put that in a little clearer than that. G/B in the weekly. G/B. That means an alternate count. Everything so far is good. The stochastic is only at 77%. I would prefer that it was at about 83. And the 9 is above the 14, so that's good. But there's a pattern that I look at, and so many charts have done this. In fact, I said I'd do that. I'll show the S&P in a moment. Look, the daily chart went to a peak D. I drawn in, it's one that I actually wanted to get for subscribers that kind of got away from us, so I didn't do that. I chose this particular midpoint, right? I'd done all the work. I did everything that needed to be done in the Chapman Wave methodology in terms of if you're going to buy something. This is what I usually show subscribers. I go in detail in the chart. I show the chart. And there's the Chapman Wave inside wedge, the dashed green line. Here's the Chapman Wave inside track repellent zone, which it broke above right here on about the 7th or 8th of November. Peak G right here at 76.78 on the 25th of August, 76.78. And it goes down to the 55 level, 54 or 55, right there, early October, and then it starts a rally. So what happened was it went to a peak D. That's the objective in the Chapman Wave methodology. Go from an identifiable low bar to peak A and then a B, and then hopefully very quickly it upgrades to a buy mode, meaning that it should go to at least a D. But that peak C, and one of the things that I was a little concerned about was that peak C had quite a dip to the 200-period moving average. Look how fantastic it's been as a propellant zone, even though it went under it. And then it took off, and then it gapped up, and 3 days later, it made that test of the 76.78 high of August. It went to 77.28. How many times do I talk about these double bottoms and double tops within pennies of one another, even though they're days, weeks, sometimes even years between that? So it goes to 77.28. But the MACD is good, but it's just about to turn down. The stochastic is not as strong as it was. The 9-period exponential moving average is still very good. So this peak A, and I hope, Joe, you're listening because you said you wanted to go through many of these charts with Chapman Wave methodology, having taken my course, and you want to keep following up. So, and I will send you that booklet that I mentioned. There's peak A, there's peak B. They're called gray A and gray B because they are under the previous high. Under the previous high basically implies that until it goes above it or until it gets to maybe a leg C, it is just a counter trend rally. But wait a minute. Normally I would do this. I'd grab this outside edges, I'd make a rectangle, and I'd say if it can make in a shorter time period, but sometimes it does it even in the same time period, higher highs and higher lows, then it can get to the previous high just under, right on, or just above. And then if it turns down and takes out halfway into the rectangle that it's formed, be careful because it can go all the way down to the bottom. And that would be the pattern I call the dreaded H. It means it looks like a lowercase h and arches over at a peak A or a B and then fails. So it's in the middle now. It's done already the one thing, which is like the V shape or the cup formation within the rectangle going to the previous high. It's only done it in a B. But if you go to the 120-minute chart, let's see if it did that, going to a D. Peak A, peak B, peak C, peak D, yes. And now it's turning down. So it's fulfilled all the requirements, but now, because of the market conditions and because of even the semiconductor conditions, which were fabulous last week, I'm looking at this and I'm saying, uh-oh, I think this is going to be pulling back. So the question is, where should I enter? And I would say you have to have some patience over this week, maybe not all week, but at least some part, because we're going to be hitting December in a few days. But at least for the moment, let's see what happens in a number of these stocks, because so many of them have done exactly the same pattern. They've gone to a high, they've pulled back, they've made kind of a rectangle, a large rectangle. Within it, they've made the cup, which reverses to the sine wave going from cup to arch to cup to arch. And now they've gone to the arch pattern. Look, here's the same thing on the S&P. S&P, except it went to a slightly higher high. But what did it do? It stalled right at the 200-period moving average in a G/Z notation. So all of these stocks that I'm looking at, maybe not quite. Let me look at the SMHs. SMHs went to a peak F underneath the left side high that I thought would be the Chapman Wave bar symmetry. It failed to get there by a couple of points. The high that was made at not the high of 247.606 on the 15th of August, this high right here on the 25th of August at 235.80. And what did it do? It went to 229, I think it was. Yeah, 229.28 on the 15th and started to pull back. And look, it's the same pattern. Peak A, peak B, stalling. And there's a good chance that the S&P is going to make an A lowercase h. Let me just show you the pattern here because we're always talking about it. Let me show it to you for real. lowercase h goes to a lowercase m. Whoops. There. So this is the lowercase h, comes straight down. Whoopsie. Comes straight down and tries to rally. Rally's okay, but then it starts to stall, goes to peak area B, and it fails. So this is the H pattern that can go to a lowercase m if it holds well on the left side, but so far it's the H pattern that we're looking at, and here we are. We've got a potential for an H pattern right here in the S&P. So far it's down 2.22 in the I mean to say in the SMHs. So many of the stocks and key indices are doing exactly this. I think the SMH is going to pull back to 210 or maybe just a little bit below. That's going to be the big test of whether this is just a short-term breather and then we start up huge in December, or whether we start to fail, because so many stocks, even put call ratio, just so many things are indicating that we are overbought in a purely technical level. Some of my indicators, look, the stochastics 81, that's still good. On-balance volumes very high. It's overbought, but still very good. The back D in the daily chart of the SMH is very good, still way above the 9. To get the 9 to cross under the 14, you'd have to see the SMH at about 205. It's at 219 or under 210 at least. So far it's good. And look, the SMH's Semiconductor Market Vectors ETF, look at this. Beautiful 1-to-1, almost to the penny. You remember, I always speak about this. I say, how do these things know to have measured moves like this? And basically it's sentiment, that the buying pressure is still there, but then it gets overbought at a certain level. And that's what happened. And it hit what? It hit a trend line, the Chapman Wave Inside Track Repellent Zone. So SMHs, I think, are starting to move very nicely, but at the same time, they're a little bit shorter term overbought. Okay, so that was a rather laborious answer to on semiconductor. Next question was Walmart. So Walmart is, type it in over here, WMT, Walmart symbol. Walmart is doing very nicely, new high, recovery high at 154.64, is trading 153.42. I've got this, the only way I can really notate it is a leg C. No alternative count. Leg E in the weekly, the previous high, big doji candle right there in the week of the 22nd of April in Walmart at 160.77. I think there's a good chance we get fairly close and then it pulls back. Look at this monthly chart, peak D. There's a rectangle formation. Went over it, went under it. Remember the rules of the rectangle formation. And now it's gone back in and it's trying to get above. So Walmart's acting, and it's Costco. I had a brief stop in Costco for the first time in ages. On Saturday, Sunday, one of the days, Sunday I think it was. Look, doji candle, silent doji candle, followed by a little bit of a dip, and now it's up 7 cents today, but holding very nicely. I'm going to look at the retail, the RTH index in a moment. As soon as I return, Dow's down 170.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, I'm just doing this live. I don't know if it'll work or not. I just wanted to show you some of the techniques that I like to use. I always like to look at the rectangle formation. What's the rule of the rectangle? If it suddenly falls back down, suddenly drops sharply, and then starts to run, it can make higher highs and higher lows. There's a good chance that it's going to make a test of the recent high, just under, right on, or just above. And then if it takes out a halfway marker, be careful because it can go all the way down to the bottom. So the price I was looking at was the 940 high in gold in the 1 minute chart at 1764.7. It drops down to the 1759-ish area, and then it rallies peak A, pulls back, peak A again. You've got to count each peak, and then a peak B. Here's your starting point, so everything above that gets counted, right? And then what does it do? It pulls back quite sharply, takes out the lows on the left side, but not the major low that was made at 940, starts another move up, and that gets counted because it's a leg high. So that becomes a C, and the very next one right here at 1006 becomes D. Then it pulls back, and within 5 bars it goes to an E. Remember my rule of 136, meaning 1 is really good if there's just a digestion up or down of 1 bar, and then it makes another high, or a low. 3 is good. But 6 says you almost have to restart, and if you can't hold it, be careful because you can drop sharply. That's when you want to do a test of the left side high against the right side high. So here it is. It goes in peak E right there, 1010. It goes 1, 2, 3, 4, 5, 6, 7, 8. It hasn't made a high. And then by almost like an apology, the MACD just has a final thrust to the upside, the stochastic on the downside, on balance volume is fading. It gets to a leg F, and if you do the measured move, if you do the the vertical track, you'll see that the technicals were way weaker. So it says it could pull back. And what did it do? It started pull back, and now I do the Chapman wave inside wedge target support line, dashed line right there. It doesn't mean that this is going to work. It just gives me a sense of structure. It gives me a GPS that says this is not necessarily a GPS because that's 100% accurate. This is as close as you can get. And it says, this is my guidance. This is kind of the map. How is it going to follow it? And it says even now it looks like it's not going to work because to go from 1761 to 1759 in just the spaces of 5 or 6 minutes is asking a little too much. But at least you've got your work. You've got yourself. It shows support. It's held support. The next support is at 1760. And if it takes that out, it's going to go much lower. But we'll follow it, right? We've still got another, what have we got? Another, 12 minutes or so, 13 minutes, we'll follow it. So Chapman wave techniques, I'm showing them here. I'm showing them live because questions have come in. A lot of people are using it. And then there's some things they get stuck on. Hopefully this can help you. So I was looking at Costco. You see Chapman wave inside track repellent zone. It's gone above that for two weeks. This is the second week. So basically 1 week it closed above it. This is the second week. Let's see what happens. The stochastic's still only at 65. It's not that good. MACD's good. 9-period moving average 2 weeks ago went positive. So this is just saying that this whole area now of 516 is trading at 533. The 516 area needs to be good support. And if you're looking at the weekly chart, monthly chart, look at this. Very interesting pattern here. There's this pennant formation. Not one of my favorite formations because you've got to do a lot of work to suggest that it's going to break the trend line on the way up or the trend line on the way down. So you have to do the work on a shorter time frame, and that really helps you. What we've done on the shorter time, we said is broken this particular trend line, which is the same as the Dow, except this is a monthly chart. Got 2-3 days to go. So we're going to be following the weekly chart. And that just says if Costco by, what is the Wednesday? Is that the last day of the month? Yeah, Wednesday. So if Wednesday at 4 o'clock, Costco is able to even touch, doesn't have to close, but touch the 540s at 533 right now. That's a big ask. But if it's able to do that, that's a good sign. But it did go in the weekly to a peak C and then took a huge time lapse before it even got back close. And that just says if it breaks sharply higher from here, that's almost like a brand new move. It says usually you get a peak D, get an instant restart and keep going higher. But we've got the month to go. Costco doesn't. I wouldn't say Costco is a seasonal thing. I mean, obviously people get presents and things there, but as I say, we stopped by just the other day, looking just at one thing, and I didn't think it was that full. Well, it was after the whole Thanksgiving thing. It was on Sunday when everything had loosened up a little bit. So maybe that's not a good comparison in terms of the density of the buyers. All right, now let's go back to, I wanted to show you the RTH, which is the retail index, has gone to a G/C. It hasn't taken out the Chapman Wave Inside Track repellent zone. XRT, which is the S&P. So the RTH has 20% Amazon, so it's obviously always a little bit lopsided. But the S&P retail ETF XRT equal weighting, so Amazon doesn't distort. It gives you a much better picture, and that just says, we've been in a recession for a long time, and unofficially a recession, but in some sectors there's been a huge recession, but not in the overall economy as they term it in a formal way. But look at this, the XRT has the potential here to make that pattern I was talking about of the rectangle maybe failing right here. So it's really important to see the XRT, the overall. This is with the retail ETF. That includes equal weighting so that Amazon doesn't distort it. Look at that. There's the pattern we were just talking about a moment ago. Peak A, peak B, gray A, gray B. But actually here, the technicals are different because the 84% stochastic, on-balance volume a tad overbought, and the MACD is still good, 9-period over the 14, the price well over the 14. So I'm watching this very closely. Maybe it pulls back only from 66 to 64, 63. It doesn't take out the left side low. This is a really important week. And it's, as I say, it's one of the very few times in quite a while that we're actually looking at, we have the short side. That's unusual. All right, next question came up. Could I look at the, let's see, Walmart. Pat says, I went in over the weekend, was stocked to the gifts with Xmas. Yeah, a lot of gifts all over the show. A lot of overbuying, and then now they're stuck with inventory. I wanted to talk, IYT. So we've got crude oil pulling back sharply, but IYT's got the same pattern. At the 200-period moving average, the iShares, Dow Jones Transportation Average Index Fund, making a peak A, then a peak B if today closes lower than Friday. And at the 200-period moving average, so once again, I'm going to put this in. Rectangle, large rectangle formation, goes from a V shape or a cup shape, fails just under the previous high, and I'll put this in. Is it going to be challenged with an H pattern? I think a lot of these, the more I did the work over the weekend on different charts, the more I said, uh-oh. I actually did this on Wednesday. So Cintas, here's a really good example of things that are going right. Cintas has made a slightly lower low than on Friday. It's at 458.13. Today's high is 458.39. And on Friday, it did 458.92. But why is Cintas doing so well? So that was my big query when I did my video for my subscribers on Saturday. I said, there's a dichotomy here, a bifurcation. Cintas is moving up the all-time highs. That's a good sign. Market is down, Dow's down 216. I'll be back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, apologies. The 1759.2 low that's traded 940, which I said should be tested based on this particular methodology, if it's going to work at all, by 1049. I just took it out huge. It's down. The gold is down 11 at this point. It's 4 minutes late. And not only did it go there, it went down to 1757. So this is live. I mean, there's nothing here that I made up. Everything I did live. I showed you exactly the techniques that we're using. Look, the 9-period moving average went under the 14. Look at that. Of course, you can't just use that. You whipsaw like crazy if it goes sideways and goes up and down and up and down, so that everything that you made on being correct on the big side it almost gets taken away. Chop, chop, chop. So it's how you use these techniques. So look at that. That's really, what can I say? All right, so that's gold. In the meantime, back at the ranch, we're very cautious. Let me go back to the VIX index here. The VIX index And so I did that. I spoke up. I was asked about the retail. I did retail. The Cintas acting, as I say, bifurcated market. So Cintas is a good clue. But look at the VIX index, up $1.40. We were going to buy the UVXY, and I thought, no, it's just so risky because it doesn't always conform to the trend. There's something else going on within that, even though I think it's ripe. And I said over the weekend, I think it's ripe. And I said to subscribers to my opening call this morning, I think it's ripe for the VIX index to move. But we've got another position, and let's see if that's going to work out. Meantime, back at the ranch, what we are looking at is the VIX index, which is the volatility, the fear index, at 2187. If this week it gets even close to the 24s, then the 25, 43, 200 period moving average, which it said goodbye to, is welcoming it as a visitor this week. So we're going to be watching this closely. And right now, I'm still saying that it's a digestive, just a breather. But it might be more than that. I just don't know yet. We'll see how we close today. Have a wonderful rest of the day. Stay tuned for Steve Rhodes and all the great programming here at TFNN. See you tomorrow. Check out my opening call daily newsletter.